Good morning, traders. Welcome to the TMT stock market strategy video for Monday, December 7th. Nice big push up in the markets. The non-farm payroll numbers did come out, and market participants liked it. And also, we got a huge short squeeze, and the algorithms took over pretty much most of the day on Friday, pushing to take out all of Thursday's losses and actually rally. So that was a really good sign, but I do believe that most of it was short covering. Where do we go for this week? Well, we have to pay attention to tax loss selling because we are coming into some seasonal weakness for the next couple of weeks where we can actually start to sell off a little bit before we actually go higher. And again, it is still an if about the Santa Claus rally, guys. So let's just keep that in check. But here's the UUP. Here's the dollar. And then the dollar actually had an inside day from that big Thursday sell-off. But we have to pay attention to what's happening with the dollar. If we get some further weakness in the dollar, then I think these commodities will really have a nice day. And I've been talking about gold for the last couple of weeks. We're going to have a real good gold trade. I don't think that because a couple of days of rally, that gold is not going to sell off any lower. I do think we see lower prices at one point. Let me get to that chart. Here's the GLD, the ETF tracking for the gold. Now, gold is down about $4 in the GC contract, but really have a nice big day here. Let's see if we can make a lower high and fill that gap. And if we don't take out this low, then I will be more inclined to look to buy that pullback, that higher low from here. If we do take out the low, then I'll just wait for a new base building area below par. But I do think that that GLD breaks below 100 and the GC contract, which is the futures contract of gold, will break 1,000. And that's where I think where that 980-ish comes in, 987, 990. That's where I think you could put that. That will put a low in for gold for quite some time. And I think you're going to see gold rally again. All right, let's take a look at the TLT. Here's the bonds. Now, bonds rallied on Friday. I don't know why, but it's obviously when they're talking about raising rates, but bonds did rally. Algos got control of it. Inside day from Thursday, from Friday, but let's see what happens in the coming days. I will be paying attention to what bonds do. That's also going to obviously affect equities. Spiders monthly, I wanted to show you. Technically, guys, we have gone nowhere for 2 months. So we have two dojis. We have indecision candles, right? Now, how do you trade it? Well, we take out the high. We're going higher from these indecision candles. We take out the low. We are going to go lower. And that also is the 20-month moving average. If we take out that low and we start to go low when we close 2 months below, then I think that the markets will be in trouble and will at least be due for a pullback. And we're gonna see. Here's that low in this area here. That will take that long-term channel out. You can see this long-term uptrend line. And this is really I'm going to be paying attention. Now, it's a monthly chart, so we're not going to revisit it till the end of the month. But this is something that I just wanted to bring to your attention. Here's the daily chart of spiders. As you can see, we closed outside of the previous day, took back all of its losses, and now we're starting to move higher here. Okay? But the momentum indicators are still pointing lower. We did get some nice movement. Let's just see what happens here in the coming days. Again, we're coming into some tax loss selling, so just be aware of that for the next two weeks, okay? Now's the diamonds. Diamonds are, you can see here, it is our lagging index, but as you can see, also took out Thursday's high, closed outside. So let's see if we get some sort of a good base building. Now, I do want to mention that aside from the tax loss selling that we have in the next couple of weeks, we also have oil that's really getting clobbered here today. Oil is getting destroyed. It's down over 3% and moving even lower. I think we're going to get set up for a real nice oil buy here. Again, pay attention to that dollar. But that's going to affect equities because there's a lot of oil stocks in the S&P 500. So make sure, keep in mind when you're trading equities or if you're trading the index, just be careful, okay? Next is the Russell IWM. Now, if you look at the Russell 2000, this is where the canary in the coal mine comes into play. We still have market divergence here. You could see that every other index took out the high, right? With the Russell, not even, well, let's say half of Thursday's loss. So that is not a good sign that the leader can't even take out the high from the other indexes that I showed you. Now, that's not a good sign. Take a look at the transports. Same thing. And what is this doing? All it's doing is back testing the symmetrical triangle, the lower trend line area of support. So this is not a good sign, guys, that we can't even rally or at least take out this area here from Thursday where the S&P did and the Dow Jones did as well. Those are two lagging indexes. So I'm making a point here because be aware. Don't get so crazy that and you want to start looking to buy because we're moving to new highs. That's not going to happen as long as the Russell and the Dow, Russell and transports continue to lag the other three indexes, okay? And then I want to show you the Qs. Lastly, is the Qs. That was a good sign. But again, guys, don't get yourself fooled on the Qs. I showed them to you before. There's about 3 or 4 big moves in the big cap tech. Amazon, Google, Apple. Those are the ones that are really pushing the Qs. So just make sure you're aware of that. All right, guys. Hope you have a great day today, and we'll speak to you tomorrow. Take care.